Good evening. This is the Elliott wave update for the NASDAQ 100 and the S&P 500 for Wednesday, April 19th, 2023. The sideways action that we actually have been experiencing since pretty much the beginning of April continues in a sideways fashion. That despite some additional information via earnings reports that were received today and this afternoon, including Tesla, which they continue to talk about that they've made money and that they've done this and that the cars are delivered, et cetera, which doesn't necessarily balance out for a lot of people with what came pre the earnings in terms of what expectations should be. It all remains very interesting as the market grinds through this earnings season and tries to factor in those earnings, what we're seeing happening on Capitol Hill in terms of the debt ceiling discussion, with a budget being put out also by the Republican members of the House. Quite a bit of things that aren't really pointing to that we're going to have a passage of raising the debt ceiling so that the government does not have to confront or even plan for any default on our debt or running out of money to provide a lot of services that our government does, and also just to keep the government operating. Starting here with the NASDAQ, I'm starting on the 4-hour chart. I basically just want to continue to show that sideways action. So there was the high. That high was on April the 4th. And here we are on April the 19th. And we've not broken that high. And we're basically holding above the lows, which remain consistent with the way that I am labeling the count right now. Now, for the first time, I'm now filling in some blanks in terms of what this all possibly could look like. Now, I want to just share with you, this would suggest that we're in a diagonal triangle for a fifth wave, and it's becoming more and more difficult to hold that when not only is wave 4 easily overlapping wave 1, but it's broke below the low, or actually equaled the low of wave 2. So it's ceasing to really present any applicable count or even labeling that I can put here, but I basically just put down what each little move may consist of. Now, I've not really run into situations like this other than that it could end up being just a very sloppy, strange, and weird first wave. So again, we might be continuing and just carry this out for a while longer. Now, the theory, not the theory, but the word basically that's coming around is that we could last in this type of mode until the 3rd of May. Well, the 3rd of May is quickly coming upon us. So it truly is not all that much longer that we would have to wait. We will continue to have earnings reports. In fact, let me just take a quick peek to find out what we got on. That's May 2nd. And then we have AMAT, I'm not sure of. Google is on the 25th, so that's next week. And then we have Honeywell on the 27th, so that's next week. Metaverse on the 26th next week. So we still have quite a few. And then Microsoft on the 25th. So we have a great deal coming next week of our larger firms. And so what we're looking at is the 24th on Monday, the 25th, the 25th, 26th, 27th of next week. So the Tuesday, Wednesday, Thursday are going to be pretty full of at least these larger tech titans, as I call them, putting in their reports. So I know that NVIDIA actually reports quite a bit later in the cycle. So we'll have to wait on that one. In fact, most of the others will be all done, and we don't know where we're going to be in terms of the overall move. Now, again, I just want to continue to reiterate, in my view, this is the October low, this is not bullish. This is not the start of a new bull market. This is not how they begin. They don't start with bank failures, with problems with the economy, with inflation, with everything that's going on. This is not how a bull market starts. This is not bull market action, where we go up in 3, we come down in 3, we go up in 5. That's an ABC. We go down in an ABC, and we're now rising in what appears to be 5, but it's really hard to kind of put the finger on it to say exactly what it is. So again, I'm not certain. Coming back to where we are right now, if I have to kind of put in and decide, well, what could all of this be in terms of producing this type of a fifth wave? The first one I can put in, well, let's just take it. What we would do, we go to the top and we go back to that low, and then we have the following. So 100%, would this small wave equal to that, would be equal to this very odd wave at 13,305. Remember, we need to get above 13,354 to put a square, nice completion to a fifth wave up, to complete an intermediate C wave, and then in turn, a primary B wave. These things are still possible. Now, within this hourly chart, I kind of have what, 1, 2, 3, 4. Okay. So maybe I get an A, but because it also should form 3 waves if it's going to follow the triangle type pattern. But right now it's looking like maybe it's going to be a 5. But guess what? When we got into it, we got up, we made this high, and then they immediately sold right into the close. In fact, after the close, they truly brought the market down. And this is almost before, actually, Tesla's earnings came out very quickly after the bell. So included within Tesla's earnings report, they brought the market down from 85 down to 56. So it is getting more difficult to continue to look at what's happening as we're going to break out. I do still feel that the market needs to get up higher, and possibly now as maybe 1.236 or up to these resistance areas before this overall larger move is going to be complete. So again, here on very long on this inside now, we have the larger fifth wave. We haven't even gotten to 0.382. And again, let me just pull this out so you can see what I'm talking about. That if I open it up this way, here's 1, 2, here's 3. And so we run the fibs from the bottom of wave 2, or the start of wave 3, to the top of wave 3, to the bottom of wave 4. And that's how we get the extensions for wave 5. The most common being that wave 5 will be 0.618 of wave 3. That's 13,739. We can barely get above 13,340 at the moment. Oh, excuse me. So it's getting real sketchy as to what actually is forming here. So I'm not sure where I can start to connect Fibonacci to give an accurate estimate or calculation for an upside move. But if I were to just stick with what this is telling me, the hope would be that at least it could get up to 0.382, or at least equal this high. So again, we're looking for a lot from this fifth wave. We may get it. We may get it. But each day that goes by, it becomes less and less a reality. So we're going to play it day by day. We're going to see what happens. But let's just see what else I can put in. If I had to really kind of go on this one, I'm going to take this off. And now we're going to go here. Let's go inside here. And if I had to go from here to this low and saying that this is the low that holds, now we got a little bit of potential. And but that is saying that wave 5, if it's equal to wave 3, is going to be at 13,014, 314. Still short. If it extends, it can be the longest wave, because we see that wave 3 would not be the shortest wave. So again, if I'm counting 1, 2, this third wave would be, right now it's the longest, but wave 5 can exceed that length and not be breaking any rules. The rule as it stands is that wave 3 is most often the longest and the strongest. The rule states what it cannot be is the shortest wave out of waves 1, 3, and 5 within an impulse move. That's 1, 2, and this is 3 and 4. And 4 extends to get us up to where we need to be above that. Possible. But that is suggesting that a rally is going to kick in and just not stop. Could it happen between now and Friday? Well, possible. All things are possible. But every time we get to a certain level, bam, it's sold off. We get to a certain level, bam, gets sold off. We get to a certain level, bam, it gets sold off. This is a continuing pattern all the way through this entire procedure here. So what's going to make this fifth wave any different? I don't know yet. Moving averages continue to be very non-committed. The 50 is kind of flat. Even the 4 and the 8 are flat as we come into the close. The 20 struggling to get back above the 50, and the 200s are flat. Not a very bullish picture, but hey, that can change. Over in the S&P, pretty much the same story. Here again, we still have 1, 2, 3, 4, but you can see they're much better formed. And they are 3, 3, 3, 3. It fits much, much cleaner in a triangle, diagonal fifth position. And that would take it out to consider that if we go back out to the 4, while this still is in play, we tend to shy away again from that right now, even close, like 41.93 to 4,200. So those remain in the picture for right now, as does that triangle pattern where the primary wave A would shift over to the June low. Leaving it as it is counted, it also still works right now. We have wave 1, 2, 3, 4. I think actually this would count better as A, B, and then 1, 2, 3, 4, and then we're working in that fifth wave. That keeps it open that this would be an E wave to complete the other running parallel preferred count that I have. Nothing's been broken yet in either one. So dropping back to the hourly chart, we've got this diagonal coming, even though it kind of thought that it didn't actually break it. So if it connect 1 to 3 and the bottom of 2 to 4, we may have finishing move coming up. So within the S&P, we have, that's not, let's see, that came down. So that's not 1, 2, but we could have 1, 2. Get a decent third going, get ourselves up to 42.13 with the potential. And so this still exists, folks, with the potential of 42.40. Those still exist, but this market needs something to hang its hat on that as a catalyst, we can build a strong fifth wave. Hasn't happened yet, doesn't mean it won't. So moving averages, basically pretty flat. Still, the 20 here is actually below still. Nope, just above, got back above, as did the 8. So they're back above that 50, and that provided a little bit of good news. One thing I want to share, moving out here to the daily, and Actually, where did it go? Oh, there it is. I don't need it on the daily. But yeah, I could. That's what I want to do. But I want to open this way up. And check this out. Hanging man, hanging man, hanging man, da, da, da. But we had 3 ones that managed to close bullish or green, and today didn't. So how's that for a pattern? How's this for declaring, well, we're in a new bull market? It's like, really? In the middle of a third? This is the pattern on a daily chart? This, if anything, would have been more bullish. This finishing. So while difficult, the S&P is a little bit cleaner in what it's forming up here. We're going to hang in there. We're going to continue to try and count it. So what can I say for tomorrow? I'm going to continue to look for additional upside, but here as well, but not as hard. No, I will say not as hard as in the NASDAQ. The S&P gets up to a good level, starts to look like it's going to head up and break. But even getting up to 41.86, 87, that was the high today, was a push. It was almost painful to watch. It would go up, they bring it down. It would go up, they bring it down. In fact, look at how that bar closed. Right in the middle of nowhere, we got this big cross. This is the market we're dealing with today. Again, continued low volume. Now for tomorrow, and I apologize because I actually misread because I was on the wrong day. Excuse me. So for tomorrow, we have initial jobless claims. We have the Philly Fed manufacturing survey. Those are both at 8:30 a.m. Eastern. And then we have existing home sales, U.S. leading indicators at 10 a.m. A couple of Fed governors also speaking. And then also at 3, they've got a new little thing going. Dallas Fed listens with Dallas Fed president. Yeah, that happens at 3 p.m. Eastern. More important, initial jobless claims, Philly Fed, and then existing home sales, U.S. leading economic indicators at 10 a.m. And that's where I'm going to end it for today. And our next update will be on Thursday, April the 20th.